Welcome to episode 2 of series 4 of our OR Talks podcast. Today I'll be discussing Morrison and Morrison Group and how that integrates within Ormond Rutter. Here are your hosts, Neil Seeger
and Marc Jovanovic.
So today we're joined by Nick.
Hello.
So Nick, you're one of our tax specialists.
Yes.
And you're here to talk to us through how we integrate with Morrison and how the tax benefits are there.
Yeah.
Okay, and how we utilise them for advice and knowledge.
Yeah, okay. So firstly, what is Morrison then? People are probably wondering.
True.
It's an international group of accountants in different countries. They're headquartered in London, where they liaise with all the different countries and create marketing events around the world so Morrison members can meet. So they're just other accountants in other jurisdictions. As you know, we're in the UK, we give advice on the UK, but we have clients who trade elsewhere in the world or are moving there. We can't give advice on Ireland, Spain, Australia, America. We have to use experts in that jurisdiction. So we can go to a trusted advisor in Morrison's, find an advisor in that country and then use them. And obviously they know who we are and we know who they are.
Perfect, okay. So one of the things we're going to go through is how that actually works and a couple of case studies of how we do that and examples we've got of how that's benefited us. Okay. So one of them, I think we were talking last time, one of them was about a Spanish case.
Yes, we had a couple who are UK resident for many years. Actually, the lady's mother was Spanish, but she was born here. She has dual citizenship, but they've been resident in the UK all their life. They're deciding to retire to Mallorca,
okay,
where her family was from and where they're building a villa. He's a high net worth individual, and he'd still got dividend income from companies that he'd set up, but he wasn't actually working. He'd taken some Spanish advice by word of mouth and spoken to some people out there, and he wasn't quite happy with the advice. So he came to us and we found our Spanish advisor. Now in Spain there's many different tax schemes for foreigners moving to Spain. You'd have heard of Beckham's law.
Yeah.
There's retirement visas, and each different part of the country can have different tax laws, which the federal government might like or might not like. So it's a changing landscape in Spain of tax. They were moving to the Balearics, which has a special scheme which would have helped him. So what we looked at is what advice he'd taken and how we could help him. The first thing we had to look at was really the statutory residence test in the UK, which is something we do here, to look when will you stop being resident in the UK, because that's the key point.
Yeah.
And to understand what assets he's got here and what he should do with those assets before he leaves, becomes non-resident. And then we had to look with our Morrison partner when he would become resident in Spain. They have a different tax year. Not many people in the world have a tax year running to the 5th of April. I think there's one or two other countries. But most of them are on calendar year.
Yeah.
So there's always that crossover, and you've got to look about part year, what are you going to do at those times. But as they're retired, they've got pension pots, they've got ISAs, they've got their main family residence here, they've got a large portfolio of shares here. So we look at what they should do and what they should do for inheritance tax purposes.
Yeah, that comes into it too, yeah.
So it's like a two-pronged thing, isn't it, really? You've got the UK tax when you're leaving to think about, and the Spanish, which is why it's important we're working together with the Spanish advisors, I guess.
Exactly. When you go to a country like Spain, obviously it's very familiar to people in the UK. We all like going on holiday there. Yeah. A lot of people retire and live there. But their tax system, their legal system is totally different to the UK. It's civil law as opposed to our common law. So they can look at income and capital in different ways than we do.
Yeah.
So it's no good just rocking up there, sitting there, enjoying life on the beach, and suddenly after a year you're getting a little tax. They say, oh, we want a lot of tax on this because you've not looked at it. So we looked at this person. They had lots of ISAs. They've been putting their ISA allowance in every year over their life, married couple.
Like you would advise as a UK?
Yeah. Great, tax-free, sell it tax-free, all the dividends are tax-free. But obviously Spain doesn't recognise ISAs. So through our Morrison partner, they'd say, it would just be like a normal share portfolio. We wouldn't recognise that. So our advice was actually sell that before you become
Yeah.
non-resident in the UK because it's tax-free.
Tax-free, yeah.
And our Morrison advisor managed to point us towards the most tax-efficient product in Spain that would work. There would be some tax, but it would be lower than normal based on what they were doing, which was great. So,
so if they'd done that afterwards, they'd have had a big tax bill.
They'd have a massive capital gain probably in Spain, which wouldn't have been good. The second thing we looked at was their pension pots. They've got SIPs they built up through their family business. Now, actually, through double tax treaties and talking to a Morrison partner, a lot of the things like taking your tax-free lump sum and how it's taxed is very similar to England. UK and Spain have, through the DDAA, have agreements over how pensions are dealt with. But the one important thing to think of is if you are a resident in Spain, you can get a no tax code, an NT code from HMRC because you're a resident in Spain, which means your pension provider will not deduct any tax. And when you get that, the Spanish tax authorities will agree to it and say, yeah, you're a resident here. So they're aware you'll be taxed as you would in Spain. And actually the income the tax rates are quite similar to the UK. Yeah. They vary a bit. There's some allowances for having a pension.
So that would save you having to try and claim it back.
Yeah, I mean, you could get the UK back, you could do a tax return and claim,
admin and
it's cash flow.
Cash
flow. Yeah. Why do that? That's a good thing to do. So we also advise them on their home because as you leave your house, you lose what's the private residence relief, as you know.
So that's if you sell a UK resident home, you pay no tax.
Yeah, where you live.
Yeah.
So as you know, if you live in a house or you rent it out, then you live in the house. There's periods that are taxable on capital gains and the periods that are not. HMRC give you an extra 9 months if you've been living there. So if they've been, say, they left it there because they like the house and their children might be living there, their adult children, but it's still their house, and they've lived in Spain for like 5 years, but they've lived in that house for 10 years before, there's a third period that would be subject to capital gains. Yeah. And there's all rebasing allowances. So we went through that. They had a particularly large plot of land that had some sort of agricultural maybe land on there that they redeveloped. So it was quite difficult, complex case. But then we asked our Morrison partner, how would this be dealt with if they sold that while they're in Spain and resident? Would that be subject to capital gains? And it was quite complex and it was quite clear. Either they should gift it in some way to their children. Now there might be some tax on that if they wanted to, but their children were young adults and they might not want to give them that sort of responsibility and capital. They might get married, there might be divorce, anything, bankruptcy. Hopefully not, but you've got to think about that. So should they sell it now, get a lump of cash, and maybe put that somehow for their children
before they leave the UK.
Yeah. And then that's why we started looking at gifting. Obviously, you can gift things here, potentially exempt transfers to your kids, survive 7 years. In Spain, the laws are totally different. If they've done that while they're a resident in Spain, there's gifting tax, and there's different rates for your spouse, your children, and anyone else.
So even though you haven't received any proceeds,
if they were gifting,
wow.
We were talking about setting up a trust. Spain doesn't recognise the concept of a trust. That could have been awkward, so that could have been bad planning.
That's quite an important point as well, because a lot of people have trusts set up in the UK, be moving out there.
And exactly, and one point I would consider there, if it's all been set up before and you're the settler and it's for your children there and the beneficiaries are UK based, it can work. But if you're the trustees, this is something to think about. Say you and your spouse are the trustees, you've settled it and it's for the benefit of your children, but you move to Spain, it will then become a non-resident trust because you as trustees control it. So you need the majority of trustees to be in the UK.
Based in the UK.
This is very important. But then, do you think, so if they move to Spain and they got the majority of trustees there, how will the Spanish tax authorities look at it? Not that they recognise trust. They might say, actually, you're the company directors, you control this entity.
It's your income.
It's your, it's a company, you're controlling it, it's your income. Now, they might not, they might, because the concept of trust is awkward. We spoke to Morrison about it, and it's a very complex point in tax law. It's not an easy thing to look at. So again, something to look at before you go, and certainly not something to settle a trust while you're in Spain, back in the UK, etc. Think about gifting, and that led on to us to look at inheritance tax. As you know, inheritance tax you normally pay inheritance tax where you live, but you'll always pay inheritance tax on your UK assets.
Yeah.
So things like UK bank accounts, house, immovable property, even UK shares can be liable to inheritance tax. So even though under the new rules, now non-dom's gone, figures arrived, foreign income and gains, you can be outside the IHT network in 10 years of non-residence.
That's a long period to get through, isn't it?
That's a long period to get to. Obviously, if you're young, you've still got the spousal transfer free. So if one of you can survive 10 years, that's fine. So what you're going to consider is, in this case, when they do become, if you like, resident in Spain for IHT, their Spanish assets out there will be subject to Spanish wealth tax. And there is a wealth tax in Spain that can be annual, etc.
That's something we don't have, isn't it? So that's a new concept for people. Exactly.
So you might think it's great moving to Spain, but there's a wealth tax, and you've got to be careful. It does kick in at a certain level, and that's something that our Morrison advisor went through in detail with the client to explain, what they could do with that. So it's a case of you're still going to have UK IHT because they've got assets in the UK, and you're going to have Spanish IHT. So it was just crucial to go through the whole thing.
So it's something that Mark's favourite point, I think, isn't it? Before we move to Spain.
Forward planning.
Forward planning. I know we always say on every time I'm on plan.
Yeah, it's so true with tax though, and you've got to plan, because otherwise you'll get these unexpected things like the wealth tax people wouldn't have heard of. Being caught out by capital gains tax when they were over there and things.
Trust not being recognised.
Yeah.
That's something that actually we take for granted.
Exactly.
If I was moving to Spain, I wouldn't consider it. I wouldn't consider it, but I just think, well, they're okay, aren't they? So off I go.
Yeah. We'd be on the beach with our drinks.
I'd be there having a great time.
Of course.
But that's tax.
Your area, important thing to do on your tax return is put your date of leaving.
Yeah.
So let your tax advisor, whoever does your tax return, know when you're leaving, because there is a date to put on there, isn't there?
That's a really important thing. Yeah, it's telling us what your plans are. Because then we can help you. If you tell us after it's happened, a lot of the time it's too late. So if you're thinking of doing it, even if it's only like 50-50 as to whether you do it, it's worth looking at with us.
And when I talk to our Morrison advisors, like in Spain, there's probably 5 or 6 in the network. I'll speak to them all, and they all have different, areas of expertise, and some of them very expat driven, deal in that market. Same in Portugal, they deal with a lot of people moving to Portugal, and they understand the English mentality moving over there. They understand the issues because they've seen it before. They've had people who've planned. They've had the people who've never planned and got caught in a Spanish problem. So it's really useful. I mean, I learn things off them all the time. It's really helpful.
And it's not just Europe, is it? They cover all around the world.
They cover all around the world.
America. So a couple of states in America. I've got a couple of cases ongoing with Morrison at the moment.
I've used them Scandinavia, France, America. Just dealt with a New Zealand trust. They help there. And the case we're going to come on to now in Thailand.
Okay, blimey. So the Thai case, wow.
It's a slightly different one,
Yeah, so what happened? What was that one? How did they help us with that case?
We have a client who's got a UK company, but it's actually owned by a UK citizen who's been resident in Thailand for 20 years.
Wow.
Okay. So they moved out there. They manufacture things. They work in the recycling industry, and they manufacture things that take dirty water and make it clean.
Oh wow.
Their biggest client is Hong Kong. They manufacture everything in Thailand. Their sort of sales offices in the UK. So they're across different continents and different things, and they sell things all over the world. But they need to be in Thailand because that's their manufacturing base. And from a lifestyle choice, he's chosen to live in Thailand. He's got family there, etc. So this gentleman has also got assets back in the UK, and he's got adult children in the UK. He's got houses, he's got an old pension pot, receives salary from a UK and Thai company, so it's quite complex. Now, about a year and a half ago, they changed the tax rules in Thailand. Before, I don't know how you describe it, before we had non-doms, they were on a remittance basis, so it was only money you took in or earned there. So his overseas salary was tax-free, but they've changed the system that if you've been there for a certain number of years, you're taxable on your worldwide income. It's not that simple, but that's the complexity of it, which was a problem for him. A reasonably wealthy man, but suddenly a large amount of his salary or dividends could become taxable. Now we all go onto Google, we all do this, we all do a bit of research, but Thai tax is something I'd never dealt with over my year, and I've dealt with a lot of different countries. So I spoke to a couple of advisors in Morrison out there, and they were very helpful. Chose one. We actually got them to meet and talk to the client. We obviously did Teams calls with them, explain the situation, explain the changes. Obviously, when there's a change like that in a country, there's a lot of flux and there's a lot of rumour. Our client had spoken to people, down the restaurant, you heard this, So you hear all the rumours. So speak to the actual tax experts. And they say, this is the law, this is it, and this is how the tax authorities interpret it, which is obviously always key, isn't it?
It definitely.
So it was quite clear he was going to have to pay extra tax, but by digging into it, we sort of found other issues, but we've been able to solve them. Now we're looking at the case of this gentleman for inheritance tax. He was reasonably elderly. So say he's got family in the UK, family in Thailand, he's got assets in Thailand, and he's got assets in the UK. So inheritance tax in Thailand would have been based on his Thai assets.
Yeah.
And there's a free spouse transfer as well. So that was all quite able to do, but we made sure he got a Thai will, made sure he got a UK will just to cover off.
Yeah.
He wanted to leave his Thai assets to his Thai children and his UK assets to his UK resident children and do some planning around that. So that was always good, which actually this spurred him on to do that. And then we looked at his contracts of employment, because he's got a contract of employment with an overseas country from Thailand in the UK, and he's got a Thai contract with his Thai company. So you have to look in those cases of what work do you actually do for the contract. Because what you don't want to do is do work for the UK company while you're resident in Thailand and you're there all the time. You want to do that work when you're working maybe for their client in Hong Kong, etc. And otherwise you could drag that UK company into the Thai tax net. Now I think Thai corporation tax is about 20%, so it's sort of similar. So you're not too worried. But then you don't want to get into an argument with HMRC and between the Thai tax authorities who's got taxing rights. So we looked at the double taxation treaty, went into detail, spoke to the Morrison partner about how they analysed the tax treaty on their side, how we looked at it in the UK, what the tie break clauses were. And I wouldn't have been able to do that without the Thai.
Without Morrison,
it would. Morrison just really helped us there, and they are now dealing with his personal tax. He was using a local accountant who maybe didn't have as much international understanding, and now he's dealing with the Morrison partner in Bangkok, who's doing all his tax returns, and for his other expat staff who live there, and dealing with their corporation tax in Thailand. And liaising with us around, what we do from the UK. So it's a perfect solution.
So that's been a really good success story of how you can work with Morrisons and different advisors in different countries.
He was very worried and he was quite stressed, like that I can't sleep at night.
I can imagine.
And now it's all sort of laid out, proper tax planning, tax returns.
The weight off his shoulders.
With the new laws taken into account, he can sleep well.
All organised.
Because
it does make you wonder, and I always think this before we sort of started working as part of the Morrison Group, is if you have a problem in Thailand, how do you find a Thai accountant?
Yeah, exactly.
You don't just pick up the phone and phone a helpline, do you? You can't find that. And I speak to other accountants and friends of mine as well, and they have that problem. How do you find somebody that can do those things, or a couple of them? You can bounce ideas off and say, actually, I prefer you over you. Morrison gives us that.
Yeah, and because they're part of the group, we know they're respected and trusted. We can trust them. That's the key thing.
Yeah.
Finding someone just off the internet in Thailand or America or wherever, you don't know about them. You've got to do due diligence. Whereas being part of the network, you know they can trust them.
I mean, Morrison do vet, people, and obviously, if they weren't up to stuff, I think they wouldn't be on the network anymore.
Absolutely,
and they're always looking to expand into other countries. There are one country I found that they didn't cover. But actually talking to them, they said, actually, we know someone in France who can help you on this. So they put me in contact with someone. Perfect. So even speak to the head office, they've always got someone. Yeah. In Scandinavia, Norway, Denmark, Sweden, they're getting more coverage because they're quite light. I think it was maybe Norway that hadn't got coverage, but the Swedish office covered it. So it's always good to find these things out. And, they're very helpful. And certainly there's more and more people, international issues, aren't there? Companies trading abroad, trading abroad, but people moving, so you've got to be able to cover it up.
So I've got a case, my American one that I was saying is a UK company, and what they want to do is set up a branch in Florida.
Yeah.
And obviously every state has got different tax rules.
Yeah, exactly.
And what I was struggling to get to understand was actually how does it work if you've got a US corporation which is owned by a overseas company, and how is that taxed over there? Do we pay tax over here? Do we pay tax over there? And then actually we had an hour meeting with the American accountant, and who went through everything. And the clients then got a clear plan of how it works from a UK point of view, how it works from that tax point of view. And actually a corporation wasn't the right option, actually. I thought it naturally was going to be, but it wasn't, actually, for what we needed. So
I spoke to one of our clients the other day who make cycling products, high-end for bikes and accessories. They make all the gears and brakes. And they sell a lot in the US, and they're getting bigger. And obviously everyone's talking about tariffs, but they're wondering, at the moment, a lot of companies selling from the UK to the US just use a drop-off method. They don't warehouse. So if you like, the DHLs deal with that. They just sell it, and all the taxes are dealt with through the agent going in. So they haven't got a warehouse, they haven't got a US presence. And the sales tax is dealt with at the other end. So you don't have to do that. But as you get larger, say you want a warehouse, you want a presence, you do have to look at which state to go to, where you're going to be based. You might have sales agents out there, etc. And as you say, I've had a client on the west coast of America, which is about 9 hours behind as opposed to 5 hours. So it was good to actually find a Morrison advisor on the west coast for my client who lived in Washington State, because they didn't want to deal with anyone on the east coast. It was hard for us because it was a 9 hour time difference, but they were in the same state, and they actually met and helped them with their tax issues. So that was another win.
It's massive. It's very useful, isn't it, to us, having that Morrison group link and connection.
I think the key thing is, if you're looking at moving abroad or working abroad or doing business overseas, get in touch with us and we can put you in contact with overseas advisors that can help on that side. We can do the UK side, and we can help you connect with advisors overseas.
Absolutely perfect.
And what we always say, plan before.
Definitely.
Yeah, absolutely. What's your other number one? Forward planning and... I can't remember what it is now.
Oh, keep testing me.
No, I can't remember what it is now. So
leave me alone, Neil.
That's generally one.
Get out of my office.
So, but I think that's been fantastic, Nick. I think you've actually taught me an awful lot about two fantastic case studies there. They've really led my eyes to how it's assisted us.
A pleasure to be back, gentlemen. A pleasure to be back.
Thank you.
So thanks for joining us, and hopefully you found that really useful. If you've got any queries on anything we've discussed, get in touch, and Nick or one of us will be happy to help you. So until next time, thanks for joining us.
Thank you.
Thank you very much.